Hello Wolfpack, we're back here on Ethereum actually for a change. Haven't looked at Ethereum in quite a while other than some live streams, and that's why I'm doing this video today, because I haven't had an actual YouTube video on Ethereum in a while. And without further ado, let's jump straight into it. Now, I have a couple of charts I want to look at for Ethereum, the first being this chart here, which I'm actually going to look at that second, but the first being, or the second being, however you want to put it, being the daily chart on Ethereum, and then obviously, as I've just showed you, I look at this chart, and this is a macro scale on Ethereum, so this is looking at kind of the overall picture. What does the long term look like in Ethereum? And it's quite telling, and it actually gives us a good example of what the trend is doing on Ethereum. So without further ado, let's look into the daily chart. The daily chart is looking pretty interesting. It looks very similar to what Bitcoin was looking like, and we can see that via this line I'm going to highlight here. I'm going to turn it to a dotted line so you can see it. That is the pink downsending level of resistance, and we've currently actually what we've done on Ethereum is we've jumped above this line, and then we've come down and we've closed just above it, and now we're in an area in which we might be seeing a bounce off of that line. And so if we do see that, not only would that be a flip of support for Ethereum, it'd also be an inverted head and shoulders pattern that would work out quite well for the bullish argument. Now, if that head and shoulders pattern, that inverse head and shoulders pattern does play out, the target would be what we're looking at from this dotted blue line that I've just drawn up on the screen here, and that target would be coming at around 4,000 USD. Zooming out, we can see 4,000 USD is actually a major resistance zone, and so that target would make a lot of sense. But if we take into account our critical indicators, such as the bull market support band, such as the 50 and the 200, and such as the Ichimoku cloud, for example, we can see that getting above 4,000 would actually be a bullish continuation for Ethereum, and that kind of goes against what we're seeing on Bitcoin, in which we're seeing on Bitcoin a bit of a bearish argument. Now, this is partly because of the fact that, well, this bounce off of support here isn't actually confirmed, and there is a decent chance coming up on the 14th of February, in which the Federal Reserve is holding kind of emergency meeting. There is a decent chance we could see a correction in the markets, regardless of whatever we perceive to be, an inverse head and shoulders pattern here. And so it's not entirely guaranteed at all that Ethereum forms this head and shoulders structure, and it's not entirely guaranteed at all that Ethereum sees another bounce here. We could, in fact, drop straight through this support line that was previously descending wedge formation. So we're going to have to wait and see with that. There simply is not enough evidence on the charts to show us what is going to be happening next on Ethereum. But what I can say is that we've actually dropped below 3K, and 3K is the start of this green box here. That is a major support in terms of psychological and in terms of actual price support. We've lost that for now, and Bitcoin is not looking particularly great as well. Go ahead and check out my previous Bitcoin analysis, in which I literally outlined, I outlined, I should say, that we could be seeing one last final upswing that could take us to, say, 48K, in which case I wouldn't see a $4,000 Ethereum as completely unbelievable. But after that, I think we'll be seeing a rejection. And regardless of what happens in the short term, regardless of where we go in the short term, I think that the overall trend is down on both Bitcoin and Ethereum. But you have to weigh that possibility, as I've just said, for Bitcoin to go to 48K and Ethereum go to 4K before a rejection. But given this Federal Reserve meeting, caution is definitely the best option. And also given the fact that the technical analysis doesn't look particularly great, 100% caution is the best option here. Now, if we're talking about a larger picture, and I've talked about this before, where would Ethereum be going in the case of, say, a bear market bottom? It's slightly harder to tell with Ethereum than it is with Bitcoin, because Bitcoin has a longer history than Ethereum, where Ethereum's only been around for one bull market. But given the fact that we think Bitcoin's going to be correcting, say, 70% down to the 200-week SMA, I would say that Ethereum is probably destined to come down to, say, 1,400 to 1,700 and retest that region, possibly even wicking below to, say, 1,200 for a test of support there, just on a wick. But I would say this green box is the target for Ethereum in the bear market. That's what I'd be looking at. Now, I suppose one of the most worrying things about Ethereum is that the macro structure that was formed in the last cycle has very much been kind of put into turmoil in this cycle. In the last cycle, we formed a very similar structure to what we did this time. We had this W formation here, and then a spike up. We had a W formation and a spike up over these relative blue resistance lines. Now, all of the dates matched up perfectly. Now, if you take into account as well the bull market support band, we can see that in 2017, we tested the bull market support band in July. We formed the lower, kind of low on the W, and then we tested it again in September, formed the higher low on the W, in between testing resistance in June and in August, August and then broke out here and then dropped below later in the year. Now, in this cycle, or in 2021, we did exactly the same thing. We tested bull market support band in July, we tested the top here in September, or August, I should say, and we tested the top here in May, which is just a month away from June, and then we actually broke out on the same month after the same level of retests at the same period of time in the same structure. But it didn't lead to an explosion like it led to in 2017, because this cycle was cut very short by the amount of manipulation coming from exchanges. And that manipulation was not necessarily a bad thing, and it wasn't necessarily unpredictable. It's just the case, right? There wasn't retail buying. There was a kind of an over-influence in the market from institutions who were constantly flushing people out and avoiding or not letting something happen like it did in 2017. And there's reason for that. There's reason for that from an institutional perspective, okay? Because 2017, although it made a lot of people a lot of money, most of the people lost the money in 2018. It was only a select few people who actually kept their gains from 2017, because people got into the mindset that crypto goes only up. And so they would have been preventing something like that from happening again. But at the end of the day, institutions and companies, they're all about profit margins, and they'd probably see flushing people out for free leverage money or free liquidation money as the easiest way to make money in this market, and kind of controlling the way the market moves so they can position themselves in a better position. And manipulation exists in every financial market. I'm not complaining. I'm just saying these two cycles were dramatically different, and that's probably the reason why Ethereum broke its fractal that looked so destined to play out. And now, since we've broken that fractal, we have to kind of ask, well, what's next with Ethereum? And we can see that in the last cycle, just basing it off TA as itself, right? What we saw on Ethereum is a drop down, a steep drop down at that, and then a V formation all the way up to a retest of the bull market support band, and then a rejection, and we formed a low a few months after that, or about 6 months after that. Now we've seen a very similar drop formation, a V drop formation. Let me draw that again. A V drop formation, and then a V recovery straight up to the bull market support band. We haven't quite tested it yet, but if we do see that last impulse that I listed out before, which is a potential up to 4K, we will be retesting that. And then we might actually form a very similar structure to what we did in 2017, where we just drop straight down after that into the bear market low, which wouldn't be that low, it'd be around here, okay? So that's very much a possibility on Ethereum, and this video is just kind of to outline a few kind of possibilities there. So overall, I guess what I'm saying is that, well, there is a chance here for Ethereum on this next few daily candle closes to consolidate itself and put itself in a position for one last upward swing with Bitcoin, but on the macro scale and on the daily chart and on all the other charts. Basically, what I'm seeing is that, well, even if Ethereum comes up to say 4K, it won't be able to go any higher, and it will see a rejection into the bear market. So the bear market, in my opinion, is unavoidable here for Ethereum, unless things change, which they can do for sure. But what I'm seeing is a potential for a dead cat bounce, or a potential for just a straight drop. Thanks for watching, guys. I hope you enjoyed, and I'll catch you in the next one.